Chase Pay in 4 serves as a unique entry into the buy now, pay later market because it flips the traditional script on how these services usually function. Most people are used to choosing a financing option at the checkout screen while they are shopping online, but this specific tool from Chase is designed to be used after the purchase has already been made. It is specifically built for Chase customers who use their debit cards for everyday transactions and then decide they want a little more breathing room in their checking account balance. The way it works is quite straightforward but requires a specific set of steps to execute correctly. First, a person makes a purchase using their Chase debit card for an amount that falls between $50 and $400. Once that transaction has cleared, the user has a window of 7 days to go into the Chase mobile app and select the option to split that purchase into 4 equal payments. What happens next is a bit of a psychological win for anyone worried about their current balance, because Chase actually deposits the full amount of that original purchase back into the checking account, usually within 24 hours. This provides immediate liquidity, effectively acting as an instant refund while setting up a structured repayment plan. The repayment process involves 4 equal installments that occur every 2 weeks, with the very first payment not being due until 2 weeks after the plan is initiated. From an educated perspective on financial management, this tool is clearly designed to solve the pain point of temporary cash flow gaps. We have all had those moments where we buy something necessary, like a new set of tires or a small home appliance, only to realize a day later that a different unexpected bill is coming due sooner than we thought. The ability to undo a purchase and get that cash back into the account immediately is a massive benefit for anyone living on a tight monthly budget. One of the most significant advantages here is the 0% APR. In a world where credit card interest rates can easily climb above 20%, having access to a zero-interest installment plan is a major plus for maintaining financial health. There are no interest charges at all, making it a much cheaper alternative to carrying a balance on a credit card. Another point in its favor is the lack of friction at the point of sale. There is no need to download a separate app or undergo a credit check at the cash register because eligibility is based on an existing 6-month relationship with Chase. It keeps all financial tracking under one roof in the Chase app, which helps with overall organization. However, the tool is not without its limitations, and these are important to consider before relying on it as a primary financing method. The most glaring drawback is the low maximum limit. Having a cap of $400 across all active plans is quite restrictive compared to other services that might allow for thousands of dollars in credit. This makes the tool virtually useless for big-ticket items like high-end electronics or major furniture purchases. Furthermore, the 7-day window is very short. If a user does not stay on top of their app notifications and misses that 1-week cutoff, the opportunity to split the payment is gone forever. There is also a level of exclusivity that might frustrate some users, as you must have been a customer for at least 6 months, and certain account types like high school or secure checking accounts are completely barred from using it. While there is no interest, there is a $5 late fee for any missed payments. While $5 sounds small, if a person splits a $50 purchase, that $5 fee represents a 10% penalty, which is actually quite high when looked at as a percentage of the total loan. For the right person, this is an excellent safety net. It is perfect for those who are disciplined budgeters but occasionally hit a snag with their timing of income versus expenses. It allows for the spreading of costs for mid-sized purchases without any of the predatory interest rates often associated with short-term loans. It is a convenient, no-interest way to manage a checking account balance as long as the user is mindful of the 2-week repayment schedule. On the other hand, it is not a solution for anyone needing to finance large expenses or for those who struggle with tracking due dates, as those $5 late fees can add up and negate the benefits of the 0% interest. It is a niche tool for existing Chase members that provides a specific type of flexibility that is hard to find elsewhere in the banking world. In summary, Chase Pay in 4 is a post-purchase installment plan for debit card users that offers 0% interest and immediate cash back into a checking account for purchases between $50 and $400. The primary risks involve the potential for $5 late fees if payments are missed and the very strict 7-day window to activate the plan. It requires a 6-month history with the bank and is limited to a $400 total cap, meaning it is best used for small to medium expenses rather than major purchases. Users should be aware that while it helps with immediate liquidity, it does not replace the need for long-term financial planning and carries the risk of penalties if the B weekly schedule is not strictly followed.